Risk management is the #1 thing that every trader should be implementing into their strategy, and it's the reason why most traders will blow their accounts. In this video we're going to be going over risk management and more specifically how to calculate your position size or lot size. We're going to be using live examples to show you exactly how we calculate our position size. So let's get into the video. This is Morgan here from Fletcher Trading. Today I'm going to be showing you how to calculate your position size or your lot size. So before we get started, as usual, I'm going to leave a link in the description where you can find a free ebook showing you our strategy, the one we're going to be using in this video. And I'm also going to leave a link in the description for our Telegram group. This is going to allow you to stay up to date with the trades that we're currently taking, and we're also going to be posting lots of videos and other educational content on there. So we get a lot of people asking us what lot size we use and what lot size they should use. This is really going to depend on 3 factors: your account balance, the pair that you're trading, and your stop loss size. There are lots of different tools online that you can use for calculating your position size, but in this video I'm just going to show you 2. The first one is my Fxbox position size calculator. And again, it's going to be using 3 things. It's your account size, your risk ratio or your risk percentage, and then your stop loss size. Another option would be Steno. This is an app that you can download for your phone, and it works in the exact same way, just using your account balance, your risk, and your stop loss. It's also going to ask you for the pair that you're trading and your account currency, but we'll get into that later on. So if we go over to our live example here, I'm first going to explain why we got into this position and what we were looking at. So if we just go to the 1 hour chart, we can see that we were currently downtrending and price was bouncing off this trend line here. And then we had a resistance level at around 1.3. So if we just drop to the 15-minute chart, we can see that around this 1.3 area, price touched it multiple times here. We then had a breakdown through this level and a retest around here. And this is where we got our signal from the Elder algorithm. So after getting our signal, we were waiting for the stochastic oscillator to pass back below 80, and then we entered our position somewhere around here. We set our stop loss around 31 pips, and then we ended up exiting this position with around 84 pips profit. So before entering any trade, you've got to think 3 things. What is my account balance? Where am I going to put my stop loss? And what pair am I trading? And these 3 things are going to tell you what your lot size or position size should be. So let's just go over to the position size calculator. So as we can see here, let's say our account balance is £5,000. We want to risk 2%. Our stop loss is 31 pips. And we are trading pound to the US dollar. And we hit calculate, and we can see here that our lot size should be 0.44 lots, and it's that easy. It's also going to tell you here how much this is in actual money, and as we can see, that is 2% of our account balance. Now your risk ratio or your risk percentage is simply how much you're willing to risk per trade, and this should never change. You should always keep this exactly the same. It can be 1, 2, 3%. This all depends on your strategy, and this is personal preference. You can find this out when doing your back testing, but you should never change it. It should always be the same every single trade. This is going to allow you to conserve your capital over time and grow your account. This is one thing that a lot of traders neglect, but it's one of the most important things. If you like this video, feel free to subscribe. Again, I'll be leaving a link in the description where you can find our Telegram group to stay up to date with our trades. I'll also be leaving a link for the ebook where you can find the strategy that we used in this video. So thank you for watching, and I'll see you in the next one.